it seems that you like pretty much the consensus trade. You still like the new economy stocks, tech when it comes to Chinese equities. But at some point, is this an overcrowded trade? And do you want to look at perhaps more value-driven names?
I think you're right. And I think if you look at probably much what's happening in the mainland markets and also Hong Kong as a proxy to that, you've seen everybody really focus on the new economy names, and especially in the TMT sector. So yes, it's well crowded, but it's still, from an outlook point of view and from an alpha gen point of view, you still would see there's still upside in these names. Though I would be saying that we have seen and starting to see a pickup of a cyclical type rotation into some of the older type economy names that have been massively beaten up since the massive March pull down. So I wouldn't be surprised if we start to see a little bit of money be taken off the table on some of these high tech names and potentially go into some other sectors that have been relatively under owned at the moment. So probably we'll see that coming, yes.
Are you finding value in some of the beaten down names, the sectors that have been hit hard because of the pandemic? Retail and consumer-oriented stories on the ground, travel tourism, is that an area that you are looking at finding value within?
Yes, we are, and especially on a domestic Chinese play only, if I'm honest, where we can see that, you know, the internalization because of the pandemic is likely to be that it's a domestic play only. So those types of consumer stroke retail, even hospitality type names that are there probably make more sense to keep on the back burner in terms of looking for some sort of rotation. But it still seems to be TMT. It still seems to be the bios, the farmers, the healthcare, those types of sectors, which are still probably going to give you much more upside. If you look at Hong Kong specific stocks, such as the Hong Kong props, the landlords, the developers, the banks, yes, there's still value there, but at the moment what we're seeing is that people are far more inclined to keep pushing out onto the Chinese global type play in the tech sector as opposed to anything else. The only sector that we're really not seeing much any activity whatsoever apart from selling will be the Macau space. And I think that's got a double whammy in the fact that the US casinos are also in complete disarray when it comes to stock prices, but also the unlikelihood that we're going to get any sort of relaxation in terms of Macau gaming revenue. So that space in itself is particularly hard hit, and I can't really see that in the short term starting to gain any ground or credibility at all.